Inflation's surprising twist, Poland's rate cut debate. In a recent development, Poland's inflation rate has taken an unexpected turn, sparking a heated debate among policymakers. With consumer inflation dropping to 2.8% year-on-year in October, it's inching closer to the National Bank of Poland's target of 2.5%. But here's where it gets controversial. While gasoline and house energy prices didn't cause any major surprises, they still had an impact on October's Consumer Price Index, CPI, reading. Interestingly, food prices, which were relatively stable this year, saw a surprising flat reading, 0% MOM, contrary to last October's seasonal increase. The real shocker, however, was the core inflation excluding food and energy prices. Although the full CPI details are yet to be released, estimates suggest a drop to around 3% YOY from 3.2% YOY in the last 2 months. This unexpected decline has sparked a discussion among policymakers about the potential for another 25 BP rate cut at the November meeting. Despite the rate cuts at each policy sitting since July, the Monetary Policy Council still has room for further easing. The new macroeconomic projection may provide rate setters with the confidence to believe in a favorable inflation scenario for Poland in the medium term. Our initial scenario predicted no rate changes in November, but the low October CPI reading has shifted this perspective. Policymakers continue to emphasize upside risks to midterm inflation, including expansionary fiscal policies, robust consumption growth, and elevated wage dynamics. The impact of ETS2 on prices remains uncertain. However, inflation seems to be heading towards the central bank's target of 2.5%, and it might even dip below temporarily. With these factors in mind, a 25 BP rate cut in November now seems more probable than a pause. But what do you think? Is this rate cut the right move, or should policymakers hold off? Share your thoughts in the comments, and let's spark a discussion on this intriguing economic dilemma.